Hey gang, Joe Gonzalez here, broadcasting from Naples, Florida on a Friday evening. I think it's Friday, right? I don't even know anymore. Honestly, I don't know. It's crazy being holed up like this, isn't it? So I want to just go through something with you here and share some information because I think this is extremely important. Now, I want to let you know that I am not a stockbroker. I'm not a licensed broker. I did spend 20 plus years in commercial real estate finance. And I did go through the financial crisis in 2000, actually 1991, 2000, 1998, as well as, of course, 2008, and what we're going through now. And I just wanted to share some information with you because I think that we're looking at something that could be really underestimated, I'm afraid to say. But I just want to, share information, let people make their own decisions. This isn't to give any sort of financial advice or anything like that. So do with this information what you will. But as I look back at these things back in 2007, there's so many similarities, and I just wanted to point out similarities and a couple of differences and what I think might happen as a result. Again, this is not financial advice. I'm not recommending you do anything other than take control of your own information and do the due diligence yourself. So when I look at things now, the market is extremely strong. If you look at the fundamentals just a month ago, the stock market was going up. Well, the fundamentals weren't strong. I just shared with you this slide, which shows that the coronavirus crisis has exposed a raw underbelly issues in the economy, and this is what I've been saying for the last 5-6 years actually. And we've seen the stock market go up like crazy, and it seems like a booming economy. And a lot of that was driven by tax cuts and stock buybacks. So it wasn't necessarily average Joes putting their money into the market. A lot of it was driven by the corporations buying back their stock, which then inflates the stock price as well. So when I think back to 2007, this is the chart for the Dow Jones Industrial Average back then. This is about where the market started to crash in 2007. There was actually a liquidity event, and I was in the commercial mortgage-backed securities group, so I was in the heat of it. Had produced hundreds of millions of dollars of commercial mortgage-backed securities myself. I think I was about $400 million by June. And then all of a sudden, the liquidity dried up, and we couldn't sell our loans. There are no longer any investors for the commercial mortgage-backed securities. And that's when everything stopped on the lending side and then stopped on the real estate side. And I can tell you that the bank stocks really started to crash and the credit markets just seized up. Banks weren't lending. So our stock price went from $36 to $6. And then so this was probably about June to March of June 2007 to March 2008. And then it wasn't until September, and a lot of people don't remember these timelines, it wasn't until September of 2008 that Lehman Brothers actually went bankrupt. This just started getting progressively worse and worse. And, here it is almost a year later when Lehman Brothers went bankrupt and went under. That was the first time something like that, well, the first time in a long time something like that had happened. And then the market went up a little bit, but then also it crashed again in 2009, and it didn't hit its bottom until March of 2009, about 18 months later from the top of this market. And the market ended up losing 54%. Now, at this time, unemployment actually went up to 10% in October of 2009, almost 2 years after the first liquidity crisis. And there was a bailout of the banks first. Okay, if you recall, the banks got bailed out because they said we needed to do this to keep the financial system intact. So that happened first, and then people started getting mortgage relief and everything, but not after millions and millions of people lost their mortgages and credit went bad and everything else, and things just kind of went to heck really fast. Now, I don't know how you feel about what's going on right now in the market. There's so many things that we could talk about that I'm not going to get into with this. But right now it feels different because it wasn't just real estate or banks that was impacted right now. Right now, it's everybody is impacted. Our health is impacted. Everybody's, jobs are impacted. Thank goodness for the healthcare providers. Thank you for all that you do and the people who are out there providing services. Um, but right now, the small business owners are just getting absolutely crushed. Bars, restaurants closed down, stores closed down, your local shops closed down. The only things that's really operating are grocery stores, and all the other big industries and small business. Now all of a sudden we already have a stimulus package in place for people, which is great, as well as big companies and airlines and that sort of thing. And what freaks me out about this is, sorry, I got something in my eye. What freaks me out about this is that this is just starting, and once all these ripple effects take place, what is going to happen when small business owners, they lose their customers, and small business owners aren't really going, a lot of them aren't going to want to take on more debt to continue their businesses. And I know friends that own small businesses, and if they're asking them to take on debts, it might have taken them 2-3 years to build up their business, and now you lose all your business, and then you got to put on debt and more overhead to gain your business back. A lot of small businesses, I'm afraid, are going to close their doors, which means more people on unemployment. Thank goodness there is some unemployment relief and those kind of things right now. But the point is, once the store owners go out, and 47,000 chain stores have now closed their doors, chain stores, this market is not going to be the same again. Much like after 9/11, when the market changed and so many things happened to America overnight, this market will not be the same again. The real estate market won't be the same for a while. And I'm afraid that this cascading effect of people that lose their jobs and then lose their, small businesses lose their businesses, real estate loses their tenants. The effect is eventually then going to finally get to the banks to be bailed out again. And we're just, the automobile market is already hurting. Sales are down like 50%. We're just now getting started on this, is what I'm afraid of. Okay, I'm not saying it's guaranteed to happen, but again, just look at these charts. And here is the chart today. You see that we're at the top of the, 2020, we were up here, and then we just dropped and we had a little bit of a rebound. But again, going back to 2007, 2009 era, you had that same thing. You had up, down, up, down, up, down, but it lasted 18 months. So the reality is, where does this go? I don't know. I'm not here to do that, but or to make that prediction. I know what I feel myself, but I'm not going to give people advice on this. Sit down with your financial advisor. But my question to you is, did your financial advisor advise you when the market was right here? Did the financial advisor, did they ask you to, back in December and June, hey, or November, December 2019, did they say, hey, the market's really heated up, there's some things going on in the repo market, maybe we should look at doing something? Or did they just play the market? I mean, you decide if your financial advisor actually knew what was coming, or did they just play the market? I'm sharing information that probably not a lot of financial advisors are going to share with you. And I'm just asking you to take a look at things yourself, take control, get involved, understand what's going on in this market so you can make proper decisions and feel comfortable yourself, or just write it out. That's totally up to you. Again, I'm not giving advice, but here's some things that I wanted to point out too. Unemployment hit 10.2% back in 2009. Okay, and that was the highest we had seen since 1983. But right now, the Fed is warning that we could see up to 30% unemployment today. Okay, that's or coming up in the next couple of months, and that's just crazy what could happen. And we know that job claims went to $3 million this past week alone, which is the highest ever. And Gavin Newsom, governor of California, has already said the banks are starting to agree to defer mortgage payments for people. Okay, so what's going to go on from there, I don't know. And again, you just make your own decisions. I'm just putting information out there to show you what it looks and feels like compared to 2007 to 2009. And it took us 7 years to go from 2007 back up to a whole market in 2014. So I'm just asking you to be prepared, make decisions for yourself. Know that we have some, probably have a lot bigger things coming up. And if you think that this has added value to you, I just want to say that, we do have some products available that can help people in this time, to help improve their mood and maybe stay a little bit calm and feed your endocannabinoid system to maybe strengthen your immune system. So I appreciate any support that you might have. If you feel like I've added, $60, $80 of value, again, I don't know if your financial advisor has sat down with you and gone through things like this, but they might charge you $100, $150 per hour, $200 per hour, and a 0.5% of your portfolio per year. And if you're worried enough about what's going to happen for the next few years, and you want to take control of your life, and you want some more information on a possible opportunity and just an option to add a little bit more income to yourself, let me know. I'll take you over to theaffordablefranchisesystem.com so you can take a look at this 7-minute video that I put together. Totally up to you. But again, I appreciate all your support, and thanks for watching tonight. I hope this helps you save money in some way, or make money in some way, or just figure out what you want to do for yourself. Again, not giving any information, just wanted to share information and add value to my community. Thanks a lot, gang.